Good morning, one and all. I hope you are well. So I have just the one pair on watch today, and that is Kiwi Yen. There have been lots of pairs kind of just selling off without providing an entry, which has pretty much been the theme, I would say, for the last year and a half, which is pretty much the only reason why I've taken so few trades. The market has provided many moves, but very little, almost nothing in terms of entry. So I haven't really been able to get involved for that reason. But anyway, I'm going to break this pair down for you now, and that is Kiwi Yen. So I've just taken one pair off of watch, which once again just sold off without giving an entry, but it is what it is. The amateurs are getting involved everywhere and just FOMOing into positions. I don't do that, regardless of how a few opportunities shape up. I stick to my rules rigidly like a magnet, and that's what I do, and that's what I know. Once we get out of this cycle where the market is just selling off without providing entries, I know that that is going to serve me well moving forward, just not at this moment in time. So on the weekly chart, we have this high here, we have the near miss to the high, we come back up, we break the high, and then we move to the downside. And then we have this impulse correction, potential continuation to push lower. As I've mentioned previously, we have a bit of a strange sequence, because if we are going to move in terms of an impulse correction continuation, we don't usually go impulse correction, drop out, correction, and then drop out. But the market can do anything at any time, so we have to just analyze it for what it is. Okay, and what we do have is we have a 1, 2, 3 reversal structure into a sharp area of liquidity. We then drop out of all of this. Okay, and previously I was looking for moves down here. I shall explain that as we get down to there. But what I can see is that after we broke out of all of this consolidation here, we left a bit of a footprint, okay? And we've come up to that in the form of a 1, 2, 3 touch structure. Now, one of the things I am mindful of is the fact that we moved up. We came from a move up, okay? So we've gone impulse correction, potential continuation. So we could break out higher, perhaps because this becomes some kind of middle section. But if we're going to move to the downside from there, this is starting to look quite large, although it could happen. So we have to be neutral to these things. And as I drill down, you can see that we had, so we do have an area of volume here, but we have quite a few inflection points sat above. So it wouldn't surprise me if we push a bit higher, okay? Especially as I mentioned previously, how we've not retested the back end of all of this volume. So we could be moving a bit higher, and there may be a clue for that. So I'm not trying to, if you're new to my videos, I'm not trying to be right. I'm trying to just analyze what the market is showing me, and then step in when the market shows me what it wants to do, rather than trying to be right, which is what a lot of traders are doing. And they, by coincidence, they seem to be men. Who knew? Okay, so we potentially have a bit of a failed sell move here. Okay, I'm just monitoring this at the minute. We've had a bit of a sell-off that seems to have failed to commit at this moment in time. So what I'm going to be looking for, I'm not going to be looking for a risk entry from the top here, specifically because we've come from a move, an impulse up. Okay, we've come from an impulse into a correction. Okay, if this was, kind of this correction here was more down here, and we have more of this kind of structure, where this looked a bit like that, then that would be a slightly different story. Okay, but because we've come from a move up into a correction, that might be hard for some of you to see, but when you've seen these things enough, you know what you're talking about. Okay, so what I'm going to be looking for is, I'm going to be looking for just the market to show its hand. I'm going to be looking for some commitment to the downside, followed by the correction afterwards. In this instance, a 15-minute continuation, partly because of all the inflection points sat above, and because we haven't retested the back end of that, and partly because we've come from a move up as well, rather than, as I said, a kind of a typical reversal structure. Okay, I'm also just paying attention to things like we have a move here. Okay, so I'm measuring this impulse, and then this correction afterwards, this pullback here. Now, what we typically see, the reason I'm doing this is typically if we are going to move to the downside, these corrections tend to form about halfway in the structure. So what do I mean by that? Well, what I mean by that is, if we just take the bars pattern tool and we take this correction here, what we'd normally see is the correction would be sort of more halfway down. This is only a bit higher, but it's slightly higher up. It's not halfway within this overall range. Okay, it's slightly higher up. So that in itself could imply, if we actually take it from where the impulse started, we measure it there, that could imply that we're moving up to there, which would take us up to, which actually, if you look at this, I said yesterday how these things are mathematical, but I measure them crudely. That would actually take us up to the retest of the back end of that previous low. Okay, I hadn't measured that before. It's literally just something I've done on the fly. Okay, and if we measure it from the break, so the break of this structure here, that will take us a little bit higher. So we may be pushing a bit higher before we come back down, if we are actually coming down. So because of that, I'm going to be waiting for that push down and that 15-minute continuation, and then I would look to get short on the break or within it. And I don't know why that keeps doing that. So I've got an alert set there to see if we can break below this consolidation. If we don't, I've got another one set up there. Let's just make sure that's in the right place. I'm looking for that to see if that retests the back end of that. So I'm going to leave that there. And then what I'll do is I'll get short on the breaker within it, and then I'll be able to manage it down to the base of this messy correction here. And then my target would be there, because that would be the reason I'm specifically targeting there. And you might think, why? Well, if we measure this range, okay, from there to there, that little low there happens to be 90% of this range, okay, which is where price can pull back deeply, even if it's going to continue in the forecasted direction. So if I set a take profit there, that would give me something in the region of 7.5% to work with, and I would trail my stop loss at the same time. So that is Kiwi Yen, and that's what I'm going to be looking for today, folks. I hope you've enjoyed this short video, and hopefully we get some entries at some point that we can actually get involved in, so that these moves that keep going and going, we're actually on board one or two of them. But that's not for us to decide. Okay, all that's for us to decide is, that we stick to our rules, and then what the market does or doesn't do is up to the market. That's not what we should concern ourselves with. Anyway, have a great day, and I'll speak to you again in the next video.